We're back on Morning Trade Live. Let's focus on Qualcomm. The chipmaker is lower today after China announced an antitrust probe into one of its Qualcomm's recent acquisitions. The stock has been relatively sideways over the last 12 months. You can see how it stacks up here to names like Texas Instruments, ARM Holdings and Intel during that time. Intel, the outperformer in this group. So Qualcomm is the focus of the morning trade. Joining us now for a closer look, I'm pleased to say, is Next Gen Investing host Jenny Horne. So it seems like Qualcomm is the latest to be sort of caught in the crosshairs of this US-China trade tension. Jenny, what are the details here?
Yeah, so we are seeing the latest string of the tit-for-tat back and forth between, of course, President Xi Jinping as well as President Donald Trump. As we do see, there's lots of key meetings ahead for the two leaders to hopefully make some peace, because China right now slapping these new port fees on U.S. ships and starting this antitrust investigation into Qualcomm is the latest we're hearing from the overall China nation. But the move does coincide with Washington plans to impose new charges on large Chinese ships at these various U.S. ports. But China's market regulator did open specifically this antitrust monopoly investigation into Qualcomm over its investigation of Israel's auto talks. The measure does add to Beijing's move this week, though, to tighten various export controls on various rare earths as well as critical materials, as well as the ongoing halt we're seeing on U.S. soybean purchases, further escalating again the pressure we're seeing on American farming communities. But besides the planned ship levies, officials in Washington have reportedly in recent days proposed barring Chinese airlines from flying over Russia on flights to and from the United States, and expanded sanctions we've seen from the likes of Huawei, which is then really restricting these U.S. goods. So taken together right now, we know these are all seen as bargaining chips, but for Qualcomm today, modestly lower here, but it's one, obviously, regulator going after the company. It's not necessarily coming from in-house, from here domestically. So take it with a grain of salt, as I do think it's seen as more of a bargaining chip, less of a knock on Qualcomm's business, although we are lower today in reaction.
Yeah, no doubt a bit of China headline risk weighing on things today. But as you say, it does look like China is looking for a bit of leverage as it heads into these talks, particularly as it tries to show, look, hey, we can try to put the squeeze on some of your big names over there, you know, those that are very important to the technology space over here too. But we're also seeing that Nvidia chips also reportedly in focus. Chinese customs authorities are going to be stepping up the scrutiny, according to the Financial Times. And sort of my read into this is that we've heard a lot about, you know, leakage, sort of backdoors through Southeast Asia, etc., with China seemingly has been turning a bit of a blind eye to. But I'm just wondering, you know, how you're reading into the reaction Nvidia today off the back of this report.
Yeah, frankly, I didn't realize the mass, really black market we're seeing in the nation for these most advanced chips, as we did see per the Financial Times. To your point, Sam, they reported at least $1 billion worth of Nvidia's top AI chips were smuggled and sold in China in the 3 months from May on. So that goes to show there's still an appetite wholly in the country for these most advanced processors. But China's recently now stepped up its enforcement of its controls on chip imports, as Beijing does seek to wane the country's technology companies away from U.S. products, very specifically the targeted processors being NVIDIA's H20 as well as RTX Pro 600D, which are designed to adhere to U.S. export controls and also maintain their market share in China. But checks have been extended more recently to more of the advanced semiconductor products. So this is going to be more wide-reaching. And again, another bargaining chip, it feels like, or another sort of attack back from Beijing on Washington, as it's targeting the mass demand that we still are seeing for NVIDIA's most advanced chips. NVIDIA's guidance doesn't include any revenue impact from China. I do think that's important to note, but not exactly what you want to end the week on, although NVIDIA is shaking this off quite well, as we're actually higher in NVIDIA shares currently.
Yeah, it's interesting, isn't it? Because I heard an interview with BYD recently saying, hey, look, we haven't been told by Beijing to not use NVIDIA chips, but even if they do tell us to do that and the directive comes, hey, look, we've got a backup plan. So it's really interesting to sort of see this dynamic and this whole story playing out. But thanks for filling us in with that piece of the puzzle, Jenny Horne. I'll catch you a little bit later. Let's trade it now with Dan Deming, Managing Partner, KKM Financial. How are you approaching your example trade for Qualcomm? Good morning to you.
Good morning. Yeah. As Jenny pointed out, I mean, there's some headwinds here for Qualcomm, at least short term, and maybe it is a bargaining chip that's being used in the negotiations. But overall, when you look at it from a technical standpoint and a pricing aspect, it appears to me that it's making a lower high here, potential for some downside. So I'm looking at a trade example today to capture some downside, but have the opportunity to get put into stock at a better level. So I'm looking at buying the November 165, 155 put 1x2. You can put that on for a 50-cent credit here, so you get paid to put this position on. Gives you a break even down to 145, which corresponds with the August lows. And so if we do see some weakness over the next 42 days, this will capture some downside and give the opportunity to get maybe long the stock at a better level. If it moves higher from here, still get to collect the credit on the put spread and therefore and see where the stock goes from there. But it doesn't cost anything to put this trade example on. Gives you some downside protection down below that 155 level, and then possibly even get put in the stock at a much better level.
Okay, good look at Qualcomm there as we are continuing to track these lines out of China in this investigation. Just want to park that there now, Dan, and get your overall thoughts on the market action today as we continue to hit these sort of fresh all-time highs, certainly for the NASDAQ. We're on another sort of winning streak, it seems, for the week. What are your thoughts?
Yeah, it's interesting that we're able to hold these levels, and we look at the NASDAQ and the S&P possibly putting on a new all-time high as well. Now, the Russell and the Dow are under a little bit of pressure here, but really just off their all-time highs. What is interesting is what you and Joe spoke about, just the dynamics in the market, the dollar moving higher with gold moving higher. You know, there are a lot of cross currents here. The VIX at 16, now historically a lower level for the VIX, but you look at realized or historic volatility, it's running around 7. So in theory, the VIX is too high at these levels. As Joe pointed out, we have not seen a 1% move to the downside since August 1st. So there's a lot of cross currents in this market, a lot of head scratching, but overall, price is king, and we continue to see that upside momentum in the equity markets, and holding on to these levels today, I think, is key for the sentiment going into earnings next week.
Yeah, and as I said, we're going to be hearing from 36 S&P names next week. The financials, no doubt, the first cab off the rank. Dan Deming, thank you so much. Have a happy Friday and a great weekend ahead. Appreciate your time, Managing Partner, KKM Financial.